Hi guys, this is Erica from Gokce Capital.
Now before I begin, be sure to subscribe to our YouTube channel and turn on notifications. In 1931, amid the ravages of the Great Depression, the foreclosure rate reached 1.4%. By 1934, it is estimated that half of all mortgages were delinquent. Mortgages as an institution had been expanding through the Roaring Twenties, where before loans for the purchase of a home had largely been based out of community savings and loans programs. A commercial market had started in the previous decades, driven first by insurance companies. Now, these mortgages looked very different from what we think of as a mortgage today. They often had a term of only 5 years, perhaps 10 if you were lucky. They were non-amortizing, which meant that borrowers made interest-only payments and then paid a large balloon at the end of the term, and required a down payment of around 50%. Now, one would think that with such a large down payment, these mortgages would have been more secure than the low down payment mortgages we have today, but this was not always the case. Borrowers would often take out second and even third mortgages in order to cover the balloon payment. And when the market collapsed, the ability to refinance went away, and thus many borrowers went into default. Enter FDR and the National Housing Act, which led to the creation of the FHA, the Federal Housing Administration, whose goal was to provide insurance for loan servicers that would offer fixed-rate, self-amortizing mortgages with long loan terms and lower down payments. The National Housing Act also paved the way for the creation of private mortgage associations, the first of which was Fannie Mae, which is still with us today, to serve as a secondary market for FHA-backed loans. Fannie Mae would buy FHA-insured loans and bundle them into securities that were sold to financial markets under the assumption that the bundled security would be less of a risk, since any one default wouldn't ruin the value of the overall security. Of course, the housing market has continued to evolve, but the low down payment, long-term, fixed-rate, self-amortizing loan is still one of the foundations today and is credited with widely expanding home ownership in the U.S. And if you're curious what its overall effect was, I'll let you know at the end of this video. But I bring up a very brief history on the creation of affordable home mortgages only to provide a contrast to the land market, where no such products exist. So if you are buying vacant or raw land, you are not going to have the benefit of affordable, long-term, commercially backed loans. If you're lucky, you may find a local community or savings bank willing to provide a loan for the purchase of land in your area. But many buyers who are not able to afford a cash purchase of a property rely on owner financing and land contracts. In today's video, I'm going to go over some of the top things you should know about land contracts before you sign one. Number 1. A land contract creates a legal framework for owner financing. As the name suggests, it is a contract for a real estate sale in which the seller agrees to provide owner financing under certain terms in order to fund the purchase, and the buyer repays this loan through loan installments. Number 2, because of the unique structure of a land contract, the sale process is going to be slightly different from a traditional real estate sale. First of all, if you need owner financing, you're going to have to restrict your land search to only those listings offered by owners who are willing to provide owner financing. Now, unlike a traditional real estate sale, you won't have to go through the process of applying for a mortgage, but you will need to negotiate the terms of the land contract to make sure that they work for you. But the main difference will come at the closing table. Now, every situation will be slightly different, but often you won't have a full closing. There will be some documents that will need to be signed, including the land contract, but the property will not legally change hands yet. First, you will need to make the payments and pay off the loan. And once the loan is fully paid, the deed is then recorded transferring title to you. It's also important to note that because you will not become the legal owner of the property when you sign the land contract, you won't be able to get title insurance for the property until the end of the loan term. You likely won't have a title company serve as the closing agent. However, you could still order a title search prior to signing the land contract to verify that title is clear. Then once you pay off the loan, you can go back to the title company and request the title insurance policy. Number 3, as I just mentioned, the seller will retain legal ownership of the property for the length of the contract. And this is a big difference between a land contract and a mortgage. The vast majority of the time, you will not be considered the owner in any legal sense with a land contract. In fact, the land contract may not even be recorded. Thus, there will be nothing showing up in county records indicating that you are the owner. However, even if the contract is not recorded, it will give you equitable title to the property, which means that you will have the right to use the lot. But having said this, there are often certain restrictions baked into the contract. For example, because you are not the legal owner, you will not be able to sell the property. In addition, many sellers will explicitly state in the land contract that you will not be able to build or live on the property until the loan is fully paid. In a similar vein, because you are not the legal owner, you are not going to be able to encumber the property with a lien or a mortgage. So before you sign a land contract, keep in mind that you will not have the same rights to the property as you would if you simply paid cash for the property, and weigh these restrictions against the benefits of affordable installments. Number 4. Land contracts should include certain basic terms. At a minimum, it should list out a purchase price, a down payment amount, the loan term, the monthly installment amount, the interest rate, the balloon payment if one is required, who is responsible for paying taxes. And I will note here that some owners will require you to pay the taxes during the loan term, others will pay the taxes themselves and will simply bake the taxes into the monthly payments. And finally, the land contract should be very clear on the default procedure, including when the seller has the right to default to you and what happens in the event of the default. Now, these are just the basic terms. The contract should be as detailed as necessary in order to ensure that all the terms that you have negotiated with your seller are fully understood and written out. In addition, you will definitely want to have your lawyer review the land contract to make sure that all of your rights are being protected. Number 5. There's a reason that land contracts exist, and this is because they have a number of advantages. Many sellers do not require an extensive application process. In fact, some may forego a credit check and application altogether. Therefore, if you have poor credit, it is much easier to be approved for owner financing. Even if the owner requires a credit check and full application process, the time to get approval is often faster than if you were to go through a bank. Another reason why land contracts are popular in the land market is that they tend to be more affordable for those who have lower savings amounts. Often owners will agree to affordable monthly installments, making a purchase feasible for someone who would otherwise not be able to afford land. And this creates opportunities for buyers in the absence of commercial and conventional lending. And for the seller, owner financing can be advantageous because sellers often charge a higher purchase price, or they can charge interest, thus increasing the total amount that they will receive for the property. Number 6, having said all this, land contracts also come with disadvantages, and you should be aware of these and consider them before entering into one. The biggest disadvantage for you as a buyer is that you have few protections if you default on the contract. Thus, if you go through a rough patch and cannot make a payment for a month or two, you may very well end up losing the property and the full investment you have made so far in it. In addition, as I mentioned before, there will likely be some restrictions on how the property can be used through the duration of the loan term. And finally, you are going to be paying more for the property if you purchase it with owner financing. And it's important to keep in mind that interest rates on land contracts are often higher, maybe even much higher, than the interest rate you would receive from a conventional mortgage loan. So while a land contract will make a land purchase affordable from a monthly cash flow standpoint, it will make the purchase more expensive overall. Therefore, it is almost always preferable to simply pay for a property up front rather than use owner financing if you can afford it. But having said all this, in the vacant land market, land contracts are often seen as the best alternative to a mortgage in the absence of something like an FHA insured loan for land. And like the 30-year fixed rate mortgage, land contracts and owner financing do have the ability to expand the number of people who can afford to purchase property. And if you're curious how the invention of the 30-year fixed rate mortgage changed homeownership rates, according to the Census Bureau, the institutions invented in the wake of the National Housing Act did expand homeownership rates by 18 percentage points over the 1940 to 1960 period. And you can see that dramatic increase here. Do you have any stories about purchasing property with a land contract or owner financing? Let us know in the comments. Did you like this video? You're going to love our Gokce Land Due Diligence program. We'll make you a land due diligence expert in just 7 days. Check it out at gokcecapital.com/glad. And while you're at our website, don't forget to explore our $1 down properties at gokcecapital.com/listings. Finally, don't hesitate to reach out with any questions. You can email, call, or text, and we will respond as soon as possible. So thank you for listening, and more to come.